The following is brought to you by GFL Ag. Next thing you know the next thing. Next is Now is a short podcast discussing agriculture's emerging next-gen tech and trends as they're happening in our industry. Next is Now, presented by GFL Ag. Listen where you get your podcasts today.
I am your host, Lindsay Smith. Joining me now for today's market commentary, I've got Phil Shaw. He, of course, is farmer out of Ontario, but you probably know him on Twitter or X as @Agridome. He's a grain analyst, of course, and a longtime writer for the markets, of course. Phil, welcome here.
Well, thank you very much, Lindsay. Appreciate it.
Now, we're used to having you on the Farmer Rapid Fire to hear what's going on the farm this week, but today we're going to talk markets, and of course you follow these closely. Let's maybe start on the cash side. What are you seeing on the corn and soybean side in Ontario? I know it hasn't necessarily been a rosy picture, but what are we seeing right now?
No, it certainly hasn't been a rosy picture. I wrote a column not late last fall, but about the middle of the fall last year, talking about how big supply was winning. And, the focus behind that piece is that we just have a big crop last year. At that time, I thought the big crop was coming in. And that's essentially what has happened is a bigger crop and bigger ending stocks through last year have been set prices on a long stepward escalator down. And that's got us to where we are today. It's been a bit unusual because I expected a post-harvest rally because we always have one, but we didn't have one this year. And so it's manifested itself in cash values, which are much lower than a lot of producers have become used to over the last few years. Like, for instance, right now, old crop corn in Ontario is about $4.70 to $5 a bushel. Soybeans are around $15, or a little bit over that for old crop, $15.30 or so, and so that's less than what we've had over the last few years. Quite a bit less, really. What's interesting on the cash side, I find it interesting anyway, is that new crop on the cash side in Ontario and Quebec is much higher than old crop. And, like, for instance, $5.73 for new crop corn in Chatham, and the old crop price is $5. That's quite unusual when that happens. But basically what we have is we have a lot of old crop corn still in the bins in Ontario, and export bids haven't been very, very good. And it's not the time we get rid of it anyway. So maybe our exporters are finding quite a bit of competition on the open ocean. We have preferential treatment usually going into the UK and Ireland for Ontario and Quebec corn. And, it's just hopefully it gets there, but the bids haven't been as strong as they once were in past years. So there's just a lot of old crop corn around in Ontario, and that is partly what is affecting basis levels. And it's easily $2 less than a year ago, or $1.50 a bushel less than a year ago. So that makes quite a difference. But like I say, these new crop values are higher for corn, and that's unusual. We don't usually see that, and I really don't know a good reason why, other than everybody's looking for coverage out there because there's a lot of uncertainty. And those markets for Ontario corn might be affected by some of the Ukrainian corn that's being railed and being shipped into Central Europe. So it's just hard to know. But our cash prices are manifesting themselves lower based on the futures values that have gone lower. But keep in mind that we have a Canadian dollar that continues to be a stimulus for Ontario and Quebec cash grain prices, because that's fluttering in the 73 and 74 cent level. And that is always helpful because, as you know, if you had a Canadian dollar at par, which we had, 10 or 15 years ago, or if we had it up in the 80s or 90s, we'd have probably negative basis values here in Ontario, and prices would be at levels that we don't want to even talk about.
Right. We do not want to mention those. Yeah.
Yeah. So, it's been a long story with regard to the supply because, we had a big U.S. crop last year. We had a big Brazilian crop, soybeans, even though it is CONAB, the Brazilian crop rating agency is rating their crop less than USDA is. But still, I say, how does it hardly matter? Because we still have much, much lower prices. And the safrinha crop, which is just finished being planted in Brazil now, where they get 75% of their corn output from the safrinha crop, it's in the ground and growing, and it's got adequate moisture so far. And I mean, there's still lots of production risk with it, and it still might affect the market going forward. But that's what I guess producers could look at in the short term to see how that goes. If it goes good, it's probably not going to be good for prices. If they run into problems, which they may, then we may see some appreciation.
Right.
I know that both old crop and new crop, soybeans and corn, have gone up a little bit since the end of February. That might be because non-commercial demand, speculators and others might be covering their shorts. In other words, a small change in market position. But things are bearish. You just can't get away with that with the amount of grain we've got in the world right now.
Now, a few things. I'm glad you mentioned the safrinha crop. That definitely, a few months ago, there was speculation it might be on the dry side for that, right? But it does, as you mentioned, sounds like there's some decent moisture potentially, so that could bump production maybe more than we thought, which maybe doesn't play well. You did mention, I wanted to come back to this just a bit, corn moving into the UK, into Ireland, and the bids not being necessarily super strong right now, but that seasonally maybe isn't. When are those bids sort of the busiest? When will we typically see the most corn?
Yeah, I think it varies. I think it varies from year to year depending on market conditions, because I always say the great equalizer to moving grain is cheap. In other words, if it gets cheap enough, it's just like oil on the ground; it runs to the lowest place, and it's the same thing with exporting corn out of Ontario. See, we utilize about a third of Ontario corn in ethanol, and about another third in feed, and food, and residual supply, and then the rest of it we have to export. And of course, we import corn from the States sometimes too. It's kind of an odd situation, but that does happen. But I would say that, to answer your question, it's mostly ahead of us. Like, it's mostly April, May, June when that would happen. Bids would have to improve to get some of this old crop corn going. And we've been lucky the last few years because we've had preferential treatment into the EU and into Ireland for our corn, while the Americans didn't. But that may be changing now. And of course, there's Ukrainian corn moving into Western Europe, and so it all depends on the price of it. But as soon as you get grain out on the open seas, then you're competing with the least cost producers wherever they are. And from a Western Canada perspective, I know that you're always thinking about exporting grain and getting out of there. From an Eastern Canada perspective, it's better for us to utilize it here, whether it's ethanol or whether it's feed demand or whether it's anything else, because typically when you get out on the open seas, the great common denominator is cheap. And if it's cheap enough, it'll move. And so that's not the greatest thing either. But keep in mind that, there's something going on, because new crop bids are much higher than old crop bids right now. It probably mostly has to do with a lot of old crop corn around. But other than that, I really don't know.
So that does, of course, we are now about 2/3 of the way through March. It won't be long before crop is going in the ground. I'm certainly starting to see, the photos and snaps and sharing of seed getting moved into place on farm. And are you hearing from farmers as to whether or not, they might be shifting acres to beans? Neither corn nor beans seems, as attractive as maybe, as you mentioned, the past couple of years. Are you hearing any discussions of any choices to be made here before the crop goes in the ground?
I think that's an interesting question, because I felt the same thing. And my initial thought was, my gosh, we won't be growing as much corn in Ontario or Quebec, because it costs a lot to grow corn. And last year's crop might have been one of the most expensive crops we've grown in a long, long time. And with the market going south of us, it's kind of put a few of us probably in a precarious position with selling our crop. And when you think about planting for this year, corn is a lot more expensive to grow than soybeans. And I felt myself, my goodness, you think about the risk that you take with regard to putting all this money into a corn corn crop in the spring, and with prices lower, the risk associated with it might be perceived higher. And I thought there'd be less corn grown in Ontario and Quebec this coming year, but I don't think latest Statistics Canada's number are really bearing that out too much. Like typically we grow about 2.1 million acres of corn in Ontario, and I don't think there's projected any change for that for the coming year. But when you think about it, I often think about this. We have finite acres in Ontario. I know the guys up in the Ottawa Valley and Northern Ontario might say, Phil, that's not necessarily the case, but we reach the upper limits in corn production to a certain extent. So I don't know if there'll be ever more and more corn like you see in or soybeans like you see in Brazil, because we just run out of land and our Canadian climate gets in the way. But I have seen corn acres in Ontario drop from 2.1 to 1.8. Or even 1.7 if we have a bad spring. So if we have a wet spring and can't get the acres in, then you'll see a shift. But even though you and I are talking about the agricultural economics seem to favor soybeans, and that has been the case across the greater American Corn Belt just on futures values since the late fall, I'm not necessarily thinking you're going to see that, because our Ontario wheat acres, I think they're about 860,000. If I recall correctly, they're pretty good. They're not going to change much. And you would think you'd be less corn acres, but it's probably unlikely that will happen. Because, even at new crop values right now, which are $5.73 a bushel, and maybe they'll push up to $6. That's, knock on wood, historically, that's much better than we've expected in the past, even in the last 10 years. And so I don't think we'll see much shift in that, but I do understand the sentiment that you're implying, because I thought the same thing. I thought, my goodness, there should be less corn acres in Ontario, but from what I've seen from projections, that's not the case. But of course, if we have a tough spring, maybe that will happen. Like I've seen it before where we'll really drop, because if it gets late, at a certain point, people switch over to soybeans.
Yeah. And as you mentioned, the winter wheat acre matters as well. But if you've got winter wheat in good shape, that's unlikely to come out. So if those acres stay in, as you mentioned, the acres are pretty static as far as the total acres that go in. So total acres being relatively static means, unless we have a rough spring, I don't foresee that number changing much either. And we shall see how that bears out. I know the going sentiment in Ontario anyway is we want very dry conditions to get the crop in the ground and then have it improve. We don't always get that, but we wish, we hope. Every year.
And keep in mind that Ontario is a very wide province geographically. For instance, I'm in the deep southwest, close to the Detroit-Windsor border. And while some of your listeners, your listeners are all over the world, but I mean, some of your listeners that are listening to this that grow corn in my area are on the Quebec border. Which is 7 hours away.
That's right.
And not only is the geography different, the way you grow corn is different, the market is different for corn. The cash markets are incredibly different in Eastern Ontario, and the culture is different as well. So it's a huge geographic area, and there's different multifaceted market forces that impact these people all across Ontario. For instance, here in the deep southwest of Ontario, we'll load corn, ship it to Michigan, dump the corn, pick up corn in Michigan, ship it back to Ontario. It doesn't make any sense, from an optic standpoint. But those types of things happen. While in Eastern Ontario, obviously they can ship into ethanol plants in Quebec and the dairy market, and there's all kinds of different nuances. If the one thing, if we're talking cash values in Ontario, what happens if the Canadian dollar goes to 85 cents, or quickly goes to 80 or 81 or 82 cents? That has a big impact on our cash values, especially for soybeans and wheat. Not so much for corn, but it's that other thing that Ontario and Quebec producers have to manage, is that gyration in the Canadian dollar that can really affect Canadian basis. And I really have no strategies on how to deal with that, because it's very difficult when it moves quickly. And we've been at these ranges for 73, 74, 75 cents for probably 3 or 4 years now. But that's not normal. Usually it's it climbs and falls much quicker than it has over the last 2 or 3 years. So that could be a wild card coming up in 2024. I hope not, because at these Canadian dollar levels, people get used to these very high basis levels. But I've seen it negative, and I don't really want to go there again. But that's just part of, and that's what I mean Canadian basis. But that's what farmers think about when they price grain. So, it's always that other part of the marketing equation when it comes to Eastern Canadian grain prices that you have to think about.
All right. Well, we will be watching the Canadian dollar then, Phil, and we'll see if that ends up being a major factor this year or not. Phil Shaw joining me, of course, from way down in the Deep South. You're right, Phil. Joining me on the show today. Thank you so much for your insight today.
Well, thank you very much, Lindsay. I much appreciate it.